Hey guys, welcome back to Big Times Podcast, the place where we make money talk simple, fun, and real. Today, we're diving into something we all hate, but can't seem to escape, those crazy high interest rates. You know, that extra fee that makes you feel like you borrowed trouble instead of money. Let's break it down together. If you borrow 1 shillings, and after a while, you're supposed to return 1,200 shillings, where does the extra 200 shillings come from? From interest, a fee charged on the borrowed money. In Kenya, banks and mobile lenders charge very high interest rates. So when you borrow 1,000 shillings, you may end up paying back much more than you initially borrowed. In today's episode, we shall explore how this happens, why lenders charge high interest, and how you can protect yourself from falling into the interest trap. What is interest? When you borrow money, whether it's 1,000 shillings or 1 million shillings, the lender will charge you an interest on the amount you have borrowed. The interest is usually a percentage of the loan amount, and it acts as a fee for the lender to give you the money. For example, if a bank lends you 1,000 shillings at an interest rate of 10, you will have to pay 1,100 shillings after 1 month. Out of the 1,100 shillings you are supposed to pay, 1,000 shillings is the principal amount, while 100 shillings is the interest. When the interest rate is high, it means that you will be charged more money on the loan. Therefore, the higher the interest rate, the higher the amount you will pay when you are repaying the loan. Why do lenders charge high interest? Lenders charge high interest because they want to make a profit. As a business, they also charge high interest to compensate for the risk of lending money. There are many people who will not pay back the money they have borrowed. Therefore, the lenders have to charge high interest rates to compensate for the risk of lending. Another reason why lenders charge high interest is because they can. There is no law that caps the amount of interest that a lender can charge. What is the high interest? High interest rates are a problem because they discourage people from saving and investing their money. When interest rates are high, people prefer to keep their money in their savings account because they will earn a lot of interest. This means that people will not have enough money to invest in businesses, which will slow down the economy. Also, when interest rates are high, it is expensive to borrow money. This makes it difficult for people to take loans for productive activities, such as buying a house or starting a business. High interest rates are also a problem because they make it difficult for people to repay their debts. When interest rates are high, the amount of debt that a person is required to repay becomes very huge, making it difficult for them to clear their debts. Are lenders allowed to charge high interest? According to the law, lenders are supposed to disclose the interest rates clearly to the borrower. However, many lenders hide the extra charges in the fine print. This is where many Kenyans fall into the interest trap. They only look at the amount of money that they are supposed to repay, but they don't look at the amount of interest that they are supposed to pay. What can you do to avoid the interest trap? 1. Compare loans before you borrow money. Check the amount of interest that you will be charged and the repayment period. 2. Consider using SACCOs or Chamas. These are cheaper compared to bank loans. 3. Avoid borrowing money for daily expenses. Borrowing money should be for investments or expenses that will earn you more money. Friends, high interest rates are a problem in Kenya. They make it difficult for people to save, invest, and repay their debts. Before you take any loan, make sure that you read the terms and conditions. Know the amount of interest that you will be charged and the repayment period. You can also consider borrowing from SACCOs or Chamas, as they usually offer cheaper loans. My friends, that's the truth about high interest rates. They may look small, but they can drain your pocket and your peace if you're not careful. The good news is, you don't have to walk into that trap. Always check your options. Go for SACCOs or Chamas when you can, and only borrow when it's really going to grow you. Not just. And if this chat opened your eyes even a little, do me a favor, hit that subscribe button to Big Times Podcast so you don't miss the next one. Share this with a friend or family member too, because you never know who might be struggling silently with the same problem. Until next time, let's keep learning, keep growing, and keep looking out for each other. Big love from Big Times.